than just business news, we're news for business people. Good evening, I'm Shraddha Babla and you're watching What Did You Miss on Bloomberg Quint Live. Let's go straight to the headlines. Rahul Gandhi has been elected as the president of Congress Party unopposed and will officially take over on the 16th of December. Indian equity benchmarks rose for the third day in a row, led by gains in ITC, HDFC, TCS and State Bank of India. The Indian government has moved the Supreme Court seeking to halt the Vodafone tax arbitration. And the Supreme Court has agreed to hear Unitech's appeal of challenging the recent order of the National Company Law Tribunal directing the central government to take over the management. Banks may send loans worth close to 1.8 lakh crores to the NCLT after making little progress on resolving the stress of the 29 accounts mentioned on RBI's list. That's a Bloomberg Quint exclusive. Well, Indian benchmarks rose for the third day in a row, led by gains in ITC, HDFC, TCS and SBI as well. Neeraj Shah standing by to take us through all the action on the Dalal Street today. Neeraj, what are the key trends that played out today?
Well, interesting day of trade because we did have a small dip, not in the red, but a dip nevertheless. And then the Nifty Bank rallied about 80 points from the lows. The Nifty rallied as well. So it overall turned out to be a pretty good day of trade, as the rates show as well. Broader markets too did reasonably okay for themselves, so the mid caps and the small caps too had a bit of a rally. What did well? Continued uptrend for stocks like ITC and HPCL, not the biggest gainers, but they continued the move. They did not buckle down. What did well though? Some of those stocks will come up on your screen. The top gainers included stocks like Lupin, Ultratech, about a couple of percentage points apiece, and HDFC was amongst the principal contributors as well. Maruti Suzuki did well, about 1% higher. The bullish target by Morgan Stanley is 14,400. The normal target, the base case, is about 10,500, but that certainly spurred on Maruti as well. All was not hunky-dory. A couple of pockets at the broader end of the spectrum came off. So Radico Khaitan saw some profit booking today. Max India on that cancellation of the license down about 4.5% today. But those were few and far in between. The gainers were out there, up and running. The paper companies have been on a tear. So TNPL, Ruchira Papers, Star Paper Mills, Sesa Shahi Paper. Some really strong moves for the paper companies, as also for the dairy companies, by the way. So stocks like Prabhat Dairy up 20%, Quality up about 9%. And the management, of course, was speaking to Bloomberg Quint as well, and you can get that interaction on the website. So that was doing really well. Some gainers included Hinduja Ventures. Repcom Finance is okay, but Repro India was up another stock, which was up about 20% as well. So the mid cap and the small cap spaces showed a lot of strength. The market, third day in a row, doing rather well for itself.
Thanks for bringing us all those details, Neeraj. Markets, of course, will be watching the CPI and the IIP print tomorrow, as also the FOMC meeting where the Fed is expected to hike interest rates by 25 basis points. But Goldman Sachs has turned bullish on public sector banks like SBI and PNB after a long time, taking hope from the fact that the NPA resolution plan will free up their balance sheets. But private sector lenders still remain a favorite. So if you just look at what Goldman Sachs is saying is, if you look at the trends that they have highlighted that they will be watching out for with respect to the state-owned banks, they've said that the NPL ratios will halve from 9.9% of the loans in FY17 to 5% by FY20. They've also said that the capital infusion could lead to an accelerated cleanup of books. And while public sector banks are likely to arrest the market share fall, the shift may continue as to private banks. And on the back of that, they have reduced their earnings estimates for public sector banks by 6 to 59% for FY18 and 19, while for FY20 they have revised the EPS upwards by 9 to 16%. On the back of that, if you look at the price revisions that they have undertaken for some of the PSU banks, and that table will show, you will see that as far as SBI is concerned, they have actually upgraded the stock to buy from neutral. Okay, before that, let's also look at this interesting chart which talks about the gap in the return on assets between this public and private banks. And so if you look at the point, it suggests that at the end of FY19, the ROA gap between the public and the PSU banks was about 137 basis points, which they expect will narrow to 87 basis points by FY20. So that's another reason for their bullishness as far as PSU banks are concerned. Coming back to SBI, they have raised or upgraded the stock to buy. For Punjab National Bank, they have upgraded it from sell to neutral, with price targets for both of these names getting hiked. Bank of Baroda, they've maintained a neutral, but again, price target hikes coming in for that name as well. What have they done with respect to private banks? Well, they have raised the target prices for most of the private banks by up to 8%. The outliers remain IDFC Bank and Yes Bank, where they have taken marginal rate target price cuts for some of these names. But let's move on to the story on Vodafone, where the Indian government has moved the Supreme Court in a bid to halt the Vodafone tax arbitration. Now, an international arbitration tribunal is slotted to start hearing the 22,100 crore rupees tax case from February. And the government is seeking a stay under the bilateral pact with the UK, where Vodafone is headquartered out of. The Supreme Court today also agreed to hear Unitech's appeal of challenging NCLT's recent order directing the central government to take over the management of the embattled real estate firm. The Apex Court considered the submission of the real estate firm that its bank accounts have been frozen and the company and its jailed promoters are finding it difficult to deposit 750 crore rupees. Now, the NCLT invoked the provisions of the Companies Act and allowed the central government to take over and appoint its nominee directors in the board of the firm. Well, on to the ban on pet coke. The Supreme Court has said that it will consider the pleas of cement and power companies on December 13th. Now, in its bid to reduce air pollution, the Supreme Court imposed a ban on use of pet coke as a fuel in NCR region in October. Now, today, in a hearing related to the use of pet coke across the country, cement companies said that they use pet coke as an ingredient and not as fuel. Power companies also made a similar argument, asking the Apex Court to allow pet coke to be used as furnace oil. Environment and Pollution Control Authority has asked for the usage of pet coke to be regulated if allowed. Now, the Ministry of Environment has said that they are in the process of formulating the regulations. Delhi High Court, meanwhile, has issued a notice to the Directorate of Revenue Intelligence, Union of India, in a plea filed by Centre for Public Interest Litigation. CPIL has sought a probe into over-invoicing by some power companies. Now, the court will hear the matter next on February 7th in 2018. And staying with the legal cases, coming Wednesday, bankers will have to submit a resolution plan for the 29 companies that were identified on RBI's list of stressed accounts. Chances are that most of them will have to be admitted for insolvency. Now, 3 bankers that Bloomberg Quinn spoke to say that the list includes the 3 large accounts that make up for as much as 40% of the total 1.82 lakh crore. Now, that's on the line. Vishwanath Nair, who has been speaking to all the bankers, joins in with more details. Vishwanath, just how big is the total exposure to these accounts?
Exposures worth 1.82 lakh crore at a risk of going into the insolvency and bankruptcy process as early as the end of this month. That is what our banking sources are telling us. Now, if you remember, in August, the Reserve Bank of India had sent a list of about 29 corporate accounts to bankers for resolution outside the insolvency and bankruptcy process by the 13th of December. If the bankers had failed in securing any kind of resolution process for these accounts, they would go into the NCLT NCLT for an insolvency proceeding. Now, what bankers are telling us is that out of 29 accounts, the banking sector has an exposure of about 1.82 lakh crore, and nearly 40%, that's about 70,000 crore worth of exposure is concentrated in only 3 accounts. That's IVRCL Limited, Videocon Industries, and Jaiprakash Associates. What bankers are also telling us is that they had identified about 11 out of these 29 accounts which could be resolved outside the NCLT process. However, of these 11, only 4 or 5 are anywhere close to a real resolution plan. Now, bankers have been holding a very high provisioning in all of these accounts for a very long time because they have been NPAs for a while, so they have been providing for these accounts over the last few financial years. So therefore, if these accounts do end up going into the insolvency and bankruptcy process, the provisioning hit that was expected on the bankers' books, that will not be as high as what some people would have worried.
Okay, Vishwanath, then let's shift focus to the 3 large accounts that you mentioned. Are any of the 3 on that list of 11 accounts which may be resolved outside of the NCLT?
Of the 3 accounts that we mentioned about IVRCL, Videocon Industries, and Jaiprakash Associates, only JP Associates is the single company where bankers are trying to somehow resolve the case outside the insolvency and bankruptcy process. They are working with the promoters. That is what bankers are telling us, that they are working with the promoters to find some kind of a resolution plan, some deep restructuring that can help the company turn around. The domestic bankers' exposure in this case is over 29,000 crore. That is what the banking sources are telling us. In case of Videocon Industries and IVRCL, bankers are more or less certain that these accounts are going into the insolvency and bankruptcy process. Videocon Industries also has a subsidiary, Videocon Telecommunications, which is part of these 29 accounts that the Reserve Bank had pointed out. In case of Videocon, however, lenders are open to some form of one-time settlement with the promoters, and if the promoters are able to bring in some money before the 13th of December, then this can be settled. However, it is likely, bankers are telling us, that both these accounts will end up in the NCLT process.
Thanks for bringing us that exclusive, Vishwanath. Of course, markets will be watching out for some of these debt-laden names on the back of what happens over the next 2 days. But as far as automakers are concerned, it is good times. Automakers had a blast in November, clocking double-digit sales across the board. Now, commercial vehicles led the charge with over 50% growth. Krishanu Mukherjee joins us from Delhi with what the CM data is showing. Krishanu, how much of this can actually be attributed to the base effect, because the demonetization did spoil the party last year?
Well, according to what Siam says, almost all of it can be attributed to demonetization. To answer that question of yours, now to take it category-wise, passenger vehicles, passenger cars specifically saw a modest growth of 4.5%. Two-wheelers, on the other hand, they saw sales surge by 23.5%, but for commercial vehicles, as you pointed out, the growth was over 50%. Now, as you would remember, last year during November 2016, two-wheelers and commercial vehicles particularly were the segments that took a hit because of a more of a cash economy running in the rural belts of the country and among fleet operators who buy commercial vehicles, the MNHCVs and the LCVs also. So these were the 2 segments that took a major hit last year. And whereas passenger cars were a little shielded, considering most of these purchases within the car segment happens via loans. So these are the 3 segments, and largely the reason for that Siam has attributed for the sudden rise in sales is demonetization. Apart from that, they've said that good monsoons have actually improved the rural sales from the rural belts of India, parts of India, because now, as you know, these sales come typically with a lag of 3 months after the farmers get their money and after they sell their produce. So this is also a reason why two-wheeler sales have picked up, and also of commercial vehicles, is what Siam has said. Now, going ahead, we could expect the same performance even into December, because last year, in December 2016 also, we saw a fall in sales due to the continued effect of demonetization. And so we could expect the same thing happening, a same surge happening in December this year as well.
Thank you, Krishanu. The CM Director General Vishnu Mathur also said that the double-digit growth in the auto industry was due to the base effect from November last year when note ban was implemented. He also said that a new auto policy was in the making to deal with the disruptions in the auto industry. Listen in.
Well, we have seen overall in all categories the growth in November, the month of November, to be over 24%. with the growth coming in almost every segment of the industry, including passenger vehicles, commercial vehicles, three-wheelers as well as two-wheelers. Now, to your specific question, yes, there is a reason, because November 16, which is the benchmark or the comparative month for November 17th, where all the data is collected, was a month that was hit by demonetization. And because of that, the sales of vehicles in all categories had slumped very, very quickly in the month of November. So November is a low month, is a low base month for us. And what the growth that you're seeing here, the high double-digit growth that you've seen, is largely because it's compared to a previous November, which has a low base. The kind of change that this industry will see is going to be quite disruptive over the next few years. And I think the auto policy, to my understanding, should address how to manage this disruption without actually bringing down the employment, without actually hurting the Make in India priority that we have in the country.
But the one auto company that Morgan Stanley is betting big on is Maruti Suzuki. Now, the brokerage has raised its target on the country's largest car maker to 10,563 rupees, and that is the highest on the street. Yatin Mota is here with the highlights of that report. Yatin, what's the rationale behind this bullish call? And I believe that their bull case scenario target is as intriguing as well.
Clearly, as you look at Maruti Suzuki, it has been one of the favorite auto stocks of brokerages, and Morgan Stanley has always been overweight as far as Maruti Suzuki is concerned. Today they have come out with a report wherein they have put the target price in excess of 10,000 rupees, which is one of the highest on the street. And more importantly, they present a bull case scenario for Maruti Suzuki, wherein they have put in a target price of close to 14,400 rupees, which means that in the bull case, we could see a 59% upside as far as Maruti is concerned from the current market price. So, quite bullish commentary coming in from Morgan Stanley. They believe that the end market opportunity and significant higher return on capital employed makes Maruti one of the profitable OEMs globally. And not only that, they are also a beneficiary of the new launches and also the alliance between Suzuki, which is its parent, and Toyota as far as the electric vehicle market is concerned, wherein they will be rolling out new products, especially for the Indian markets. And Morgan Stanley believes that the earnings for Maruti Suzuki could grow at a compounded annual growth rate of close to 22% till FY20. So clearly on the earnings front and on the valuation front, brokerages are justifying the kind of valuation Maruti has seen, which is on the historical high side, and clearly a bullish case scenario of 14,000 rupees odd makes Maruti quite compelling as far as local and global investors are concerned.
Thank you for bringing us those details, Jatin. We'll see how fast Maruti can climb to at least that 10,500 rupees target. But moving on, there's more on Vodafone, this time to do with its merger with Idea Cellular. Now, it's been nearly a year since Vodafone and Idea decided to join hands in India to create what will become the country's largest telecom operator once the merger is complete. Now, the two telecom operators have lost some ground, though, over the last 11 months, with fierce competition from peers like Reliance Jio and Airtel taking a toll on margins and its consumer base. So what's the situation now, and what will the joint entity still be the country's largest telecom operator? Somit Sarkar, who's done all the maths, joins in with the details. Somit, what's the situation now?
So I'll start off with showing how the merged entity currently looks like and how it looked like during the merger, when the merger was announced. So when the merger was announced, the combined entity's revenue was close to 81,600 crore rupees. EBITDA was close to 24,400 crore rupees. It had a revenue market share of close to 44% and a subscriber base of 35.1%. Now, the current scenario has changed. Now, the combined entity's revenue has fallen by around 10,000 crore rupees. The EBITDA has fallen by 7,500 crore rupees. Revenue market share is down by around 600 basis points, while the subscriber base has fallen by 150 basis points. And this fall in revenue and EBITDA could worsen in coming quarters because of the 57% cut in the interconnect usage charges. Now, let's see how things have changed on the operational side. Now, the merged entity was aiming an annual savings of close to 14,000 crore rupees, of which 60% would be on the operational side, while the remaining on capital expenditure side. Now the 60%, that is 8,400 crore rupees, was on the operational side. Now this could still play out, but as the base, that is the EBITDA as of September 2017 has fallen by around 7,500 crore rupees. As the base has come down, the net benefit would only be close to 900 crore rupees. So in short, this merger would only help these two entities to get back to an EBITDA run rate as of what it was during the merger was announced. Now let's see on the debt side. Now Vodafone India will be transferring close to 55,200 crore rupees of debt, while Idea Cellular has a debt of close to 54,000 crore rupees. Now the merged entity had projected a net debt to EBITDA of 4.4 times, but as of now, currently the net debt to EBITDA is 6.5 times. Now let's see whether the merged entity will still remain the #1 player post a merger. Now, currently the combined entity's revenue market share is exceeding the 50% regulatory cap in 3 circles, that is Maharashtra, Gujarat and Kerala, and they have to bring down their revenue market share below 50% in these circles within 1 year of completion of merger. Also, Bharti Airtel, which recently acquired Telenor and Tata Teleservices, has taken its revenue market share close to 35.9%. So even if we assume that Jio does not gain any market share, then also the merged entity has to give up revenue market share in those 3 circles, and the difference between the revenue market share of Vodafone Idea and Airtel just being 190 basis points, the chances are very high that the merged entity, that is Vodafone and Idea, would lose its #1 position going forward.
Thank you, Somit. Meanwhile, you have credit rating firm ICRA, which has said that the telecom industry could bear as much as 90,000 crores of debt if the stake sale deals of mobile tower assets currently being discussed do tend to materialize. It predicted structural and material changes for the telecom tower industry in the medium term. ICRA also anticipates some headwinds in the short term as consolidation of telecom operators leads to rationalization of tenancies. ICRA, however, remains confident about the growth prospects in the sector in the coming years. But moving on to the big national story today, Rahul Gandhi has been elected as the president of Congress party unopposed. Rahul Gandhi will officially take over the baton on the 16th of November when the current party president Sonia Gandhi will hand over the baton to him. Congress leader Mullapalli Ramachandran announced his appointment in a press conference earlier this afternoon.
89 nomination papers proposing the name of Sri Rahul Gandhi for Congress President have been received. Since the withdrawal date and time is over, and as there is only one candidate, as per Article 18D of the Constitution of International Congress, I hereby declare Sri Rahul Gandhi elected as the President of the Indian National Congress.
Meanwhile, the Ahmedabad police has denied permission to the roadshows of now Congress President Rahul Gandhi and the BJP. Now, the roadshows were supposed to be held tomorrow. Both the BJP and Congress said that they sought permission for the roadshows. However, Ahmedabad Police Commissioner A.K. Singh has denied the permission to both the parties, citing the possibility of law and order situations in sensitive areas. And a day after Prime Minister Modi alleged Pakistan's interference in Gujarat Assembly elections, Pakistan's Foreign Affairs spokesperson Mohammad Faisal calls the comments baseless and irresponsible. In a tweet, he asked India to stop dragging Pakistan into its electoral debate and win victories on its own strength rather than fabricated conspiracies. Now, in response, Law Minister Ravi Shankar Prasad today condemned the unwarranted statement by Pakistan on Gujarat elections.
I wish to tell Pakistan that Indians are capable of contesting India's democracy on their own, as they do. India's Prime Minister is a popularly elected Prime Minister of India, and so is the BJP. We completely abhor any outside interference in India's electoral affairs. But the role of Pakistan in promoting terrorism in India is too well known in the entire world. And Pakistan, please stop giving us lessons. We are proud of India's democracy.
Meanwhile, BJP's ally in the Maharashtra, Shiv Sena, has accused BJP of stooping to a low level in the run-up to Gujarat elections. In an editorial in the party mouthpiece Samna, Shiv Sena said that the development issue was missing from the Prime Minister's campaign. It also observed that Modi had belittled himself by claiming that Congress leader Mani Shankar Iyer's remarks had insulted the pride of Gujarat. The editorial pointed out that it is futile to register complaint on EVM malfunctioning and observed that the Election Commission seems to favour the ruling BJP. On the other hand, the most talked about cryptocurrency, Bitcoin, landed on the Wall Street with a bang. Futures on the world's most popular cryptocurrency surged as much as 25% during the debut session on CBOE Global Markets Exchange. This triggered two temporary trading halts meant to cool volatility. Dealers said that the initial volumes exceeded expectations, while traffic on CBOE's website was so strong that it caused delays and outages. Bloomberg's Yuji Nakamura reports.
What we saw with the first hour of trading is about $9 million in notional traded on the CBOE across all the contracts. And then just to put that into perspective, over the same period of time, about roughly $300 million traded globally on Bitcoin exchanges, Bitcoin spot against the dollar. So for now, the futures are really just a drop in the ocean. Having said that, I think, we are seeing consistent buying or selling, activity every single minute, just one or two lots, the minimum sizes. I think what that shows us is there is demand for this product. But usually on the first day of a futures contract, you see very little activity because brokers will just kind of test their systems, make sure that the trading is working, make sure that settlement is working. But today, right out of the gate, we're seeing 1-2 contracts being bought consistently every single hour. So the notional so far isn't huge, but it's not a bad start. As for your question on who's doing this, the CBOE contract is geared more towards retail people. It is smaller. It's about $16,000 in notional right now versus the CME, which goes live in a week. That's more for institutional traders. That's about 5 times bigger than the CBOE contract. So I think the CBOE is more geared towards retail, and that's probably who we're seeing trade. For example, Interactive Brokers have said publicly that they will support it from day one. This is just a guess, but I'm guessing retail traders are the ones just buying and selling here a little bit early on so far.
Well, now moving on from cryptocurrencies to the oil market, Kuwait's oil minister says that OPEC and its global allies, including Russia, may end their production cuts before 2019 if the crude market rebalances by June. Minister Essam Al-Marzouk said that Russia is keen to end the production cuts as soon as possible. He also said that OPEC and allies can draft a strategy in June to end the global output cuts if the market is no longer oversupplied by then. The cartel and its partners agreed last month to cut production till the end of 2018. And with that, it's a wrap on this show. I hope we helped you catch up on all that you missed through the day. Thanks for watching and stay tuned to Bloomberg.